Hello friends, welcome to my channel and thanks for watching this video. As another week has gone by, so welcome to another session of USA Weekly Market Report. Now there are some quite interesting, or I would say quite dangerous as well. The developments has been developing and some things has already been developed, but whether the market is sensing it or not, we have to see. So let's start with the recent developments without any further ado. We will go through this headline later on, but let's start with the crackdown that the Communist Party of China is doing with one sector after another, where they are trying to control the business or the entire economy right now. Apart from that, the Kramer's week ahead, so I don't want to be a follower, or I don't want to pose his view as of mine, but he has been continuously bearish. If you are looking his interviews for the past 10 days, he's continuously saying that whatever we can see in the market right now is just dead cat bounce, and we will probably see something else going forward. Then we have gone through the news of illegalities where the cryptocurrency related activities are illegal and China vows a harsh crackdown, the Central Bank of China. Apart from that, this Evergrande thing is, though everybody is saying it's not going to be any spillover, but the ripple effect or the tremor we have already seen, at least a short trailer, but there will be some consequences. I don't want to go into whether it will be big or small. You will probably find hundreds or thousands of videos and press releases on this, but definitely we are in a connected world, and we will see. We will see what's going to happen over here. So I don't want to go into it. Okay, so let's go through this press release. So we are now headed into a calm before the storm. So next week could be a relatively calm stretch for Wall Street. However, he advised investors to start preparing for trading days on the horizon. After next week, the onslaught of earnings and the Labor Department's all-important non-farm payroll will strike. So these are the headlines that he has talked on, and let's see how the market has moved. But if you look his interviews for the past 8 or 10 days, he is certainly not bullish on the market. Now the actual issues, this Evergrande. So the pan Evergrande European stock 600 has ended 0.9% with all major bourses and most sectors in negative territory. Apart from that, shares of China Evergrande Group in Hong Kong fell nearly 12%, and the Wall Street Journal reported Thursday that Chinese authorities have told local officials to prepare for a potential demise of Evergrande. Uncertainty also remains around Evergrande will pay the interest due that was due Thursday on a dollar denominated bond. So they have already skipped it. So I think there is no payment on it, and there is a grace period for 30 days on which everybody shifted their focus. But I don't know. I mean, this is a pretty common sense that this kind of serious events will put the entire sector as well as the market in the limbo. Now, in an exclusive interview, European Central Bank President Christine Lagarde told CNBC that she believes Europe's direct exposure to the embattled Chinese property company Evergrande would be limited. So, I mean, what are you trying to prove? That you have a limited amount of exposure, so you have limited amount of volatility? That's not going to happen. If there is a volatility, market will sense it, and market will try to go through it in a single day. If it want to go through it, it will probably try to factor each and everything on a single day if it actually happens. So we can't say that because we have limited amount of exposure, so the market will take it in a limited amount of manner. That is yet to be seen. This kind of you know event which nobody knows, which nobody actually knows. And another thing is about the Bank of England on Thursday keep monetary policy unchanged and downgraded economic growth projections for the third quarter of this year. So, I mean, I like when central banks are saying that economic projections are low. So it does not mean that I'm in favor of any market correction or crash, but it simply means that when you have lower growth projections, the stock market will be on the rise because market or smart investor will sense that there will be a loose policy going forward until and unless everything looks hunky dory. So that's the important thing which you need to understand. Now, I think I have taken much of the time talking about the developments. So let's go to the market section and let's see what's happened over there. Uh, Closing Friday. So you have Dow Jones closed 33 points higher. You have NASDAQ closed minus 4.5. The S&P is flat almost. Everything is flat. Everything is flat. The VIX hasn't moved. So uh, it went up sharply. Then it closed after a slight consolidation. It is not going down. So this is the important thing which you need to understand and remember. The actual concern is the bond yield. You will see, and if you haven't seen, in the past Friday during the trading hours, the bond yield, spiked very sharply. And if you're looking here, the 2-year, 10-year, even 30 years bond yield, everything spiked very sharply during the trading hours. So this is not a good sign. This is not at all a good sign. And you will see how the dollar index has moved again above 93. So now the dollar index trying to be a consistent one above 93, which is also a bad sign, if not a bad sign, but it also a cause of worry. So we will start going through the charts with bond yields and dollar index because this sharp movement in dollar index, and as you can see, whether you're talking about 3 month, 1 year, everything has spiked quite significantly during the trading hours, and it has already broken the range in between which it was trading. So when bond yields are moving, market is sensing something out of it. That's why it is happening. So let's start with the most talked about US 10-year bond yield. Now, this is the chart of US 10-year bond yield, and this is the weekly chart. As you can see, the bond yield has closed above the 20-day moving average, which is the green line. It has taken its support near 50 and 100-day moving average, and if it closing above 20-day moving average, it is a very positive sign, I would say. So as you can see here, how the index how the bond yield has moved, and the levels which we're gonna look at will be 1.3 as your stop loss on the downside, and on the upside you have two specific targets to look at. You have 1.77, and also you have your big resistance for the time being is 1.86, right? So these are the two levels that we have to see on the upside. But if this is the thing, and the way the trend is shaping up, and most importantly, if it crossed above 1.8687, then let me tell you, you have a very big risk which is looming ahead. So you have 3.75 and in between a range of 3.75 and 4.3 on the upside. So there are some very big, or I would say sharp movements that is yet to be seen as far as the bond yield is concerned. And if the bond yield started moving, and this is the level which we are talking about now, it is trading at 1.45, and we are talking about 250 bips or 300 bips of rise, then this is not a normal sign, and you have to be very much dead sure about this one. Okay, don't take this thing lightly, and the way it is moving, it is quite dangerous. So obviously, moving a bond is not good for equity market. Also, as you can see here, this is the 2 years US 2 years Treasury bond, and as you can see, there is a rising, there is a rounding bottom kind of formation that has shaped up as far as this chart is concerned, and this is a very positive, I would say, this is a very positive trend. And once it crossed above 0.28, you have your next support, or next target, beg your pardon, next target at 0.42, and it may extend well above 1, which is 1.36 on the upside. So there are some serious signs that you can see, that you can actually see as far as the markets are concerned, and this is the scenario. You have to be very much skeptical. It is not about how many hours or how many days, because these things won't happen in a very short duration. And it also means that the way the central bank is behaving, something is out of their control. Okay, so there are some very serious signs which you can see on the charts, and chart does not lie. Now let's go to the price chart of dollar index. As you can see here, when the dollar spends most of your time near to the resistance level, it means it is looking something on the upside rather than on the downside. So what you have here, so as you can see, this is the level of breakout, and the index is trading very closely to the breakout level. We can't say that this is the resistance now, because dollar index, it has been moving or spending quite a time near the resistance level. That's why we have a funny feeling that this time it's going to be on the upside. So what we have here on the, as far as your resistance levels are concerned, you have a range which will be in between 93.3 and 93.46, or let's say 93.5. Once 93.5 gone, you will see a very sharp spike on the upside. So there are some serious concerns on the equity market, and forget about the news and whatever I said, this is just a news. But what we can see on the charts are actually real and serious. So try to be very disciplined, try to be very much observative if you are if you holding your trades on the long side, and more specifically in the short term duration. Okay, so these are the indicators that I have talked about, whether you're talking about bond, dollar index, or bond yields. Now let's go to the indices, starting with Dow Jones. Now Dow Jones, no doubt, showing some very sharp spikes in the past 2 or 3 days, but as you can see here, as far as the chart is concerned, you will see that Dow Jones has been moving in between a range. So the range is intact, and the Dow Jones has been moving inside it. So you have 35,147 and 34,779 on the upside. On the downside, you have 33,275 and you have 33,752. So this is the range in between which the Dow Jones is trading. Now understand this, it may be good because these are all industrial, so rising bond prices may be good for some of the companies, But whenever you are talking about the overall market or the stock with a very high beta, or like an index like NASDAQ, it will not take this thing in a very positive manner. Now, another thing that you need to understand here is, although you have a positive momentum on the upside as far as the RSI is concerned, but if you are looking at the weekly chart, where you can see both MACD and RSI on the downside, and more specifically on the monthly chart, you can see here, so there is a negative crossover in the monthly stochastics RSI. So the thing is, uh, the trend has shifted, the trend has changed, and it has an impact on the longer term time frame. Now let's go to another chart, which is NASDAQ. Now talking about NASDAQ, it has taken support and it is moving higher on the upside. So this is what we have right now. But if we sense something very negative, which we have already seen, so we have to check. So the NASDAQ range that we are going to talk about is 14,894 on the downside as your support, and you have 16,000 on the upside. You can see here the same thing applies for this chart, where you will have the RSI. As you can see, it is significantly showing us a downtrend. Okay, and the MACD, the moving average convergence divergence, is also indicating some sort of, it's not some sort of, it's actually a downtrending momentum, okay, which is which the index is indicating us. So, and here we are, RSI has already moved, or negative crossover has already happened. So there are some very serious, I would say, indications that you can see on the chart, and it is showing downtrending bias right now. So if you have long term, I'm not saying that its market always defies its move and it has its own way to think. You know, a single market participant cannot rule the entire market. But the thing is, when you have indications like this, one must not take anything in such a way that if I'm thinking something, it has to be right. Market can prove you wrong every time, okay, including me right now. So we have to see, but when there are indications, as I told you, we can't go very nimble footed. Let's talk about the gold as well, because gold has been moving and moving on the downside. So right now, bond yield moving higher is not good for gold. That's one thing you need to understand here. And the range which we may see, so this is the range that I'm talking about. You have 1682 on the downside, and you have 1865, and it's not 1865, you have 1821, and you have 1860 on the upside. But if gold futures, this is the future of gold, future price chart of gold, if it moves below 1680, you will have some serious bout of short built up, or positions unwinding, and you will see some downside risk that will open up for gold futures, and that can move it down towards 1500. So this is also in a range, but we have to see, because it is directly linked with the bond yields. Now, one more thing that is yet to be seen is the crude. So let's see how the crude has been moving, and we can see on the chart that the crude price is very much firm and very much moving on the upside. So there is no such volatility whatsoever you can see on the prices of crude. And the chart, the way the chart has shaped up is, So the chart has shaped up something like this. You have 63 bucks on the downside, and the upside range is in between 82 and $84 per barrel. This is crude WTI futures on the upside. So what we have on the charts are completely different. You have a rising commodity, you have rising yields, you have potential in the rise of dollar index. So this is a very precarious scenario that is building up over here, and by the time you understand it, markets will not be here what it is right now. Okay, market will not going to be the same. So you must be very much, as I am saying again and again, the key is to be a bit concerned. The key is to be a bit more observative and focused on what you are doing. At least save your profits. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.